Well, hello there, everyone. Happy Monday. I hope everyone is doing well, and I'm excited to be here for our weekly live here. So, for those who are new to me, I'm Meg Wheeler. I'm a business and money coach and educator, and I'm very excited to be here today to actually do something a little bit different than I normally do. So, usually when I'm here, I'm teaching about a business money topic. But today I wanted to actually share with you why this stuff that I talk about matters so much. So, why we should pay attention to the numbers in our business, why we should have accounting systems, and why we should track all this stuff, and why we should care about all of this stuff. Because sometimes I know, especially for a lot of my my clients and the folks in my community, I know this is not the stuff that you love. It's not fun necessarily, but I promise you it's super important. And the answer is not just because it's important for tax reasons, although I hear that a lot. So I did put together, I have to get comfortable here. I did put together a few slides for you today because I wanted to show you, I wanted to actually tell you through story how powerful knowing the numbers in your business really can be. And so I've got 5 different examples. These are from actual clients, actual people in my community. And it's really intended to highlight at least 5 reasons why talking about the money in your business and being familiar with the money in your business, why it matters. And so, hold on, I'm getting all these notifications. Let's make those go away. So let me go ahead and dive in and start because I don't want to take up too much time. And I want to just show you the good stuff. While I'm doing this, for those watching, I see we've got a few folks watching live. Hey, everyone. We're, of course, live here on Facebook, live here in my free Facebook group, The Badass Moneymakers, which you can join by going to megkwheeler.com/group. And we're live over on my YouTube channel. So thank you for everyone who is watching live here. If you've got any questions or comments as I go through, feel free to drop them into the chat. So I do have, let me go ahead and do this. One hot second. We're going to get a little fancy here and we're going to present. But that means I need to actually share my screen. So hold on. All right, cool. Sharing. Oh my God, I love it when things work. Perfect. So the very first reason why you should know the numbers in your business, why you should pay attention to this stuff is a really simple reason. And that's so that you can find mistakes. Maybe not the sexiest of reasons, but it is an important one. And I want to give you this example. So if my computer decides to work with me. Okay, I don't know why it's not doing it. Well, there we go. Didn't like me for a second. So this was a client of mine who, actually one of my very first clients a couple years ago who came to me and she said, she was a social media manager and really just kind of wanted to do sort of an audit of her business money situation. Just wanted to know where she could be doing better. She felt like she wasn't doing a good job she knew she wasn't doing a good job of staying on top of the money stuff and really just wanted some help understanding her numbers. So she said, the first thing Meg and I did was review my expenses from the prior month. Since I wasn't actually tracking these, she didn't have an accounting system at the time. She said, we looked at my bank and credit card statements. Within 15 minutes, we had identified over $300 I was spending every month on tools and subscriptions I never even used. Because I was too afraid to look at my bills, I just paid my credit card every month and I didn't look at what I was spending the money on. So I just want to reemphasize this. 15 minutes is all it took. We just started. I basically said, what are you spending your money on? She said, I don't know. I don't look at my numbers. Pulled up her credit card statement. We started going through it. And I said, well, what do you use this for? What do you use that for? It was so simple. And friends, this is not something, she didn't need me to do this. You can do this on your own. You can do this right now. As soon as we get off this live, pull up your credit card statement, pull up your bank statement. If you are tracking your numbers in an accounting system, which I hope you are, pull your reports from that and just look and see where are you spending your money. And this happens to the best of us too, right? Like you'll sign up for a trial or you'll sign up for a membership or some tool best thing, and then you'll decide it doesn't work for you. And then you forget to cancel it, right? It's happened to all of us. So this was an example of it, but she saved $300 every month. So she was spending $300 every month on stuff she did not need. Took her 15 minutes. This is one of my favorite examples of why you should track and pay attention to the numbers in your business, because this is such a simple win that saves her over $3,600 a year. Pretty cool, right? All right, so the next one. Now, I know I said that the only reason that there are more reasons than just taxes to know the numbers in your business, but taxes is one of the reasons. And I want to really stress why this is so important. It's not just that knowing the numbers in your business and having a good accounting system and all of that will make tax time easier, although that's clearly what I'm about to talk to you about. But it'll actually save you a lot of headache. And so my next client is a really great example of what you don't want to do. So she says, when I first started my business, I had nothing set up. I didn't have a clue. I wasn't tracking my income and expenses, and my clients were sending money to my Venmo account. So everything was going into my personal bank account. I feel like this is like one of those issue spotting things where I'm like, can you spot all of the things wrong in this? If you've been watching me for a while, you probably can. So she says, then tax time hit. Since I hadn't been tracking anything, it took me hours to go back through my bank statements and try to figure out what was business and what was personal. This is why you want your to have a separate business bank account, and it's why you want to have an accounting system. You would not have to worry about that if you had both of those things. So then she says, I also ended up owing a ton of money because I hadn't made quarterly payments. I had no money, and by the way, pay quarterly tax payments. I had no money to pay it, and I was stressed that my business wasn't going to make it. That's when I decided to get serious about my business. I started researching what steps to take and realized that I should set up my business as an LLC to minimize my personal liability in case someone sued me. We're not really talking about the legal stuff here, but that's a good step to take for a lot of business owners. She says, I set up an accounting system so that I could track my numbers and a separate bank account for my business so that I would never again have to dig through transactions to do my taxes. Love it. Oh, you know what? I thought there was another slide. There wasn't. That's where her story, there's a little bit more to her story. Actually, the one I was telling you about that's really painful comes later. I thought this was hers, but it wasn't. Or maybe it was. Now I'm actually blanking. But the reason why I bring this up is because, it is coming up. I remembered the painful one's coming up. So this is not the super painful one, but this is what's so critically important is when we think about tax time, and tax time isn't just, oh, we have to file some paperwork and this is annoying. Tax time is an opportunity, or it's one of the big expenses in our business. And if we don't do it correctly, then we're wasting money. And sometimes that means like we're literally paying in money too soon. If we're not, doing a good job of calculating our quarterly taxes, we're overpaying. I say this a lot and people always hate me for this, but if you're getting a refund back, then you're overpaying. You're paying too much into the system. You're giving the IRS an interest-free loan. And I definitely don't want to do that in my business. So it could be that, or it could also be you're wasting money in the sense that if you're not paying enough in, you're getting hit with interest and penalties. And we don't want to do that either. So knowing your numbers, tracking your numbers is super helpful for tax time. Okay, number 3, avoid painful audits. This was the painful one. I knew there was a painful tax one in here. So this is also really important. Now, this does not mean that if you know your numbers and you track your numbers, you're never going to get audited. That's not necessarily true. But it does mean that if you get audited, you'll have all of the information you need at your fingertips in an easily organized way so that that process doesn't need to be painful, okay? So this is the client I was thinking about that, and she even says right here, she says, I am the poster child of what not to do. I've been in business for 4 years and ended up getting audited after my 2nd year. It was a mess. The IRS agent asked for records of everything. I thought I was doing okay keeping my numbers in an Excel spreadsheet, but I had missed a few transactions and I didn't save my receipts, so it didn't go well. And because my clients paid me basically however they wanted, Venmo, PayPal, sending me a check, I didn't have good records of where the money came from, so I had to do a lot of digging. I just want to put in a few plugs here. Number 1, plug, this is why we want to have a good accounting system. Number 2, plug, while it's okay to be paid from a few different sources, like people can pay me via Stripe, or they can pay me via my accounting system, Wave, which doesn't go through Stripe. It's okay to have a couple. You want to make sure you have just a few and that they're really good systems that actually track your funds. Venmo and PayPal aren't really set up for that kind of thing. Definitely, getting checks isn't set up for that kind of thing. So you want to choose systems that to be paid through that are easy to use and will do a good job of tracking this data for you. Okay, so then she says, in the end, I ended up having a bunch of deductions disallowed, and it cost me a bit of money, but also a ton of time that I didn't really have. So I want to pause real quick. What she's talking about right here, this was a client of mine, Abby. What Abby's talking about here is when she says having a bunch of deductions disallowed. So she took on her tax return deductions that ultimately the IRS agent said you can't take those for whatever reason. And I don't remember the specific reasons for hers, but for whatever reason, they weren't allowable deductions. And so they were, I think, it's, sometimes this can happen if you don't have good records and you end up double counting a deduction. Sometimes it can happen if it's actually a personal thing and not a business thing. Sometimes it can happen if you don't have good records and you can't prove that that was an actual business expense. So definitely not something you want to happen, because when that happens, when your deductions go down, that means your taxable income goes up, which means your tax bill goes up. And because this was happening after the fact via an audit, that meant that she had to pay fines and penalties and interest on those additional on that additional tax bill that she needed to pay. So she says here, Abby says, it also made me realize how inefficiently my business was running. Here I was making all this money, or so I thought, but I wasn't really tracking if clients paid me or not. And I didn't have a good system for following up, which meant there were some payments I just never received. That's another problem that a lot of business owners have when they don't have a good invoicing system or a good accounting system is, if somebody owes you, a certain amount over 6 months, if you're not tracking that and automatically following up, choose a system that does that, then you might be leaving money on the table. So she says, because I didn't have a good system for tracking my expenses or saving my receipts, I was losing money on that end too in terms of missed deductions. The minute I realized this was affecting my bottom line and my family's financial security was the minute I kicked myself into gear fast. I changed everything. Now I have an accounting system that automatically tracks my income and expenses. Clients pay me through one system that follows up if they don't pay. There's that automatic follow-up. And I save all of my receipts directly into my accounting system. I don't ever want to be audited again, but if I am, bring it on. And that's the attitude to have, folks, because at the end of the day, there's nothing we can do to fully, completely prevent an audit. But there's a lot we can do to make sure that if we do get audited, it's not a painful experience. Okay, not step number 4, but reason number 4. And this 4 and 5, so we've only got 2 more to go. 4 and 5 are really where the magic happens. These are the ones that are about making more money. So we talked about the ones that are about saving money. Now we're diving into making more money. And this is where it happens. This is the gold right here. So this example is all about using the numbers in your business to refocus your efforts. And actually, before I dive into this example, I have another example from a good friend of mine who I heard him on a podcast one day, and he said, when I finally sat down and looked at my numbers, I realized that 60% of the revenues in my business were coming from this one product that I didn't think did much for us at all. And I think this happens a lot in our businesses. If we're not paying attention, we don't really realize where our big money makers are, or the ones we think are big aren't actually the big ones. So this example on, again, another client of mine, she said, this was from client Kelly, I make most of the money in my business from my $2,000 coaching package, and this was $2,000 a month, but it takes up a lot of my time, both to sell it and to work with my clients. I also have a DIY course for $497, but I hadn't spent much time marketing it or focusing on it because I knew my coaching was my moneymaker. And she was the perfect example here of, if this has ever happened to any of you, where somebody put the bug in her head, hey, you should have an online course. So she I think she took a course about it. And then one weekend she was like, okay, I'll make the course. And she made the course and she put it out there, and a few people bought. She did set up some Facebook ads and people were starting to buy, right? But she really didn't do anything else with it, did not put any time or much money at all into it, because she thought, I'm making $2,000 a month from every coaching client. That's big money. I need to focus on that. Well, that's what she thought. So Kelly says, then I started digging into my numbers. I realized that because I put so much time into my coaching package, when I factor in the cost of my time, it's not very profitable. And I want to just pause here for a second, because this is crucial. If there is one thing that I see my clients just too often do, it's not financially value their time. I had a client the other day who I was asking her about a task she was doing. And I said, well, how long does that take you? And she said, oh, it takes me 10 hours or whatever it was. And I said, okay, well, but that's 10 hours of your time that could be spent doing other revenue generating activities. And she said, well, but I do it in my off time. all of my time is valuable. Whether it's spent in my business or with my family, it's valuable. And so if I'm going to put any time into my business, I am going to quantify that time. I'm going to put a value on it, and I'm going to know what that value is so that when I ask for something in return, a sale, I'm going to make sure that I'm being properly compensated for that time. And this is what Kelly wasn't doing. Okay. So her coaching wasn't really very profitable. She had a little bit of a profit, not much. Now, she said my course, on the other hand, and this was shocking to her, my course, on the other hand, had a 95% profit margin because she'd already created it. So it literally took 0 time for her to deliver the course. She had it created. It was all recorded. It was already set up on a platform. Literally, somebody got access to it. She was not a part of the process at all. So the course is already created. And so it doesn't really cost me anything to sell it beyond minimal Facebook ad costs, which she doesn't even have to spend. She could do organic marketing as well, but she had put some money into some Facebook ads. So she said, this made me realize that I should put more money into my Facebook ads for my course since I had such a high rate of return with very little effort. And this piece right here, I want to just stop for a second. This is what's so critically important, is understanding what your ROI, return on investment, is. For what I put in, what am I getting back? If I put $1 in and I get $5 back, that's pretty great. If I put $1 in and I get $10 back, that's even better. I'd rather take that deal. Now, I didn't tell her she had to stop her coaching, but what I said was, if I were her, I'd be focusing her time and her money on the thing that was getting her the bigger ROI, her course. And then if I wanted to keep coaching, I would focus on and changing that so that it had a better ROI for her. So that's what she does in this last paragraph, or last part of the quote. She says, by doing this, I was able to more than triple my monthly revenues from just her course alone. So all of a sudden, coaching was most of her revenue, and it went like this. And remember, the course, doesn't take a lot of her time, very little of her time, takes a little bit of money, but not a huge amount. And she's getting that money back. So she did that. And then she said, this also allowed me to cut back on my one-on-one coaching because now she's got revenue coming in from the course, and raise the rates on her coaching so that it was more profitable. So she not only cut back on the coaching, she said, when I do it, I'm going to charge more so that it's worth my time. Pretty cool, right? This was an awesome client to work with, but also just experience, because she really used just this one very quick analysis. It didn't take us maybe more than a half hour to really go in and analyze her numbers and figure out what the return was, the return on her investment, what the rate of return was on her coaching versus her course. It didn't take very long at all. And then we mapped out a plan to make some adjustments, as she talks about here, to really make it work for her. And she's making a killing now. All right, so my last one. Number 5, make more money. Now, in 4, we talked about making more money too, but that was about specifically refocusing and kind of understanding your business model and making shifts there. This one's just purely about making more money. And here it is. I love this one. So she says, I'm embarrassed. This is a client of mine, Julie. I'm embarrassed to say this, but when I first met Meg, I was apparently losing money on my client work. And she says apparently because she didn't know. I didn't realize it, but when she had me put a value on the hours I spent, again, there's that important thing there. Make sure you're valuing your time. The truth was that I wasn't charging enough to even cover the cost of my time. She was losing money. Oh. So Julie says, I raised my prices, figured out how to message the value of the increased price, and now I'm happy to say that nearly 40% of my revenues are profit after factoring in the cost of my time. So she went from a negative profit, a loss, to 40%. For every dollar she takes in, 40 cents is profit, pure profit, after she pays herself. That is huge. And this is why this stuff matters so much. Because too often when I work with people in their businesses, they're leaving money on the table. Now, you're always going to be leaving money on the table, and that's a different conversation for a different day. But I don't want you to be leaving easy money on the table. If you've got clients that you're working with, if you've got a business that's going, you need to be looking at this stuff, because you need to understand where you can make small changes to drastically impact the financial stability and the financial profits of your business. It's a pretty huge deal. Cool? All right. I'm going to leave it there. If there aren't any questions or comments, I know there's still a few folks watching live. If you've got any questions or comments, feel free to drop them in the chat. But otherwise, I'm going to leave it there. If you have questions, if you want support, if you want guidance, I would love to welcome you into my free Facebook group, The Badass Moneymakers. You can join it by going over to megkwheeler.com/group. Completely free group. We do a lot of fun stuff in there. We definitely have some prizes. And it's really a great place to get your questions answered. I go live every week in there, just in there, not here on all of these channels, just in the Badass Moneymakers every Wednesday to answer your biz money questions. So it really is a great place to be and a great place to get the guidance and support you need. But other than that, that's all I've got. I hope everyone's having a great day, and I will see you all next week. Bye.